After such a large gap down, attention will be focused on price forming a range that stays within the spiral and around the 190 level. A decent attempt at filling in the gap can take place, especially under conditions where there are at least 2 consecutive closes over 190 and daily bullish volume remains at or above 15 million, though such ideal conditions would still likely see this kind of steep uptrend slow down when advancing through the low 200 range. On the other hand, if 190 can't be cleared within the next 7 to 10 days, and price falls under the spiral, a neutral to bearish stance can take the form of this kind of range, with its lower boundary around 178 to 180, which, especially if breached before the end of this month, can lead to a bearish acceleration down towards these ranges. AI stock price with a bullish advantage after the gap up, which would look to close over 37 as soon as possible to reach towards the 40s and the next arc, because a delay can result in decreasing short to medium term bullish confidence, meaning even moderate selling volume can take price down to the 35 to 33 range relatively easily, approximating the current arc. Then remember, Beyond Meat's stock chart has been on a long-term downtrend, meaning strong selling after the gap up wasn't too surprising. Of course, the mid $9 range is a key lower boundary moving ahead. Closing under it in the first half of March can lead to favorable conditions for a relatively quick gap fill, which of course can slow down upon contact with 860 and those fan lines running through the gap. Now, even if a steep incline like this were to be maintained, 1110 to 1197 is still a solid upper boundary for this short-term range, meaning a decisive close higher would likely need several green days with candles similar to the one on Thursday, with volume at least around 10 million.